We're here with Professor Acemoglu from MIT. Welcome to Colombia. This is your first time here.
It's great to be here. Thank you.
So I wanted to ask you a couple of questions regarding your book of Why Nations Fail, in which basically, just to put it into context, your main theory is that the reason why nations are poor or rich is mainly due to institutionality. So first question I want to ask you is regarding China, because China is a very interesting example of a country where institutionality is not really the way you'd like to see it. But despite of that, China has been the country that has been growing the most in the past few years, and even though economic growth is coming down, still growing at 7-8% per year, and it's potentially becoming a great power, and probably is going to beat the U.S. in a few decades. So the question is, how do you interpret the specific example of China into your theory of institutionality?
I think that's a very important question. It's one that comes up often, and we spent quite a bit of time in the book. It didn't come up today in the conference because we were talking about more Latin American issues, I guess. So at some level, to talk about China, we need to recall the distinction between economic and political institutions that we draw. So our claim is that economic institutions are key for economic success, especially sustained economic growth. But economic institutions themselves can only be inclusive and encourage economic growth, especially sustained economic growth, if they are supported by inclusive political institutions. So now in this light, let's deconstruct the Chinese growth. So the first phase of Chinese growth, starting from 1978 for about 12 years, 15 years, is very much an example of a change in economic institutions from very extractive to somewhat inclusive that then spurred a very rapid economic growth. It's very much consistent with the main themes of our book. In fact, we give it as an example of illustrating how these things work. China had a very, very inefficient system of prices, essentially no prices, no incentives for agricultural production, and totally regulated state sector in the industry. And Deng Xiaoping's reforms gradually introduced price incentives with the township and village enterprises, and then in other forms, first in agriculture and then in the urban sector. And that's essentially what underpinned much of the early Chinese growth, and it was a phenomenal growth, as exactly what you've suggested. And it took China from one of the poorest countries in the world to, on the way to becoming a low middle income country. So I think that's important, but it really underscores the importance of economic institutions. Now, where China becomes potentially a puzzle, but I will try to argue it's not, is that China has continued to grow, but it has done so under the auspices of extractive political institutions that concentrate political power in the hands of the Communist Party and a very small elite of society. Here, I think the important idea is that sort of experience where you have economic institutions that are somewhat inclusive, not fully, but quite inclusive, especially relative to Chinese recent history, together with extractive political institutions, very narrow distribution of political power, that works reasonably well for limited periods of time when a country can do the growth mostly based on catch-up. So China, we write a lot about China, and we see a lot about China because it's such a huge country, but if you look at income per capita, it's still less than 1/6 of the United States income per capita. So China is still a low middle income country with low wages. Wages are starting to increase now because it has problems in integrating its rural labor force into the urban economy. But still, wages are very low in China, and a lot of the growth has come by essentially taking existing technologies and using them with cheap labor in China and exporting them with using offshoring and outsourcing type of things. Now, that sort of economic growth we have seen in many places. again under the auspices of extractive authoritarian governments. We saw them in Latin America under import substitution, in many countries, some of them dictatorships. We saw it in Soviet Russia, where Soviet Russia started under Stalin a huge industrialization drive, again under, obviously very extractive institutions. We saw it in the 19th century with Prussia. So the difficulty that those experiences have, and that's one of the arguments we try to develop in the book, is that that sort of growth stops when the catch-up aspect stops. So Prussia grew for 30, 40 years and then started having problems. Russia, the same thing. Soviet Russia, the same thing. Import substitution in Latin America or Turkey, the same thing. So the real difficulty for China is going to come when China reaches income per capita of about 40% or so of the United States, where just using cheap labor is not going to be enough anymore. So at that point, it really needs to create new niche products, new process innovations, new ways of doing things. And at that point, it will need to make its economic institutions more inclusive. It cannot rely on party telling companies what to do. It cannot rely on sort of procurement systems that are a little determined by, or a lot determined by, political considerations or corruption. And at that point, I think we're going to have a real bifurcation in China's path. Either it will have to make its institutions more inclusive, according to our theory, or it will start stagnating, or essentially converging to a growth rate more in line with the rest of emerging economies.
Or potentially some sort of a crash?
Right. Crash, of course crash is possible too, but
well, I'm saying that because, eventually the Soviet Union eventually it just crashed.
Right. Soviet Union crashed,
and many
but
Latin American countries eventually
Latin
they had
American
huge
crash.
crises.
That's right. That's
because
true.
of
That's true. It is possible, but I think the Soviet Union, of course, was doing the reallocation of resources from agriculture to industry by fiat. It was very, very inefficient. In China, you have a lot of inefficiencies, but nothing at the scale of Russia. So the difficulty, therefore, as I see it, but of course this is speculation, is that will China be able to go to the next stage of economic growth? If it doesn't go to the next stage of economic growth, it can still do more or less what it's doing, and it can grow at 2% a year or 3% a year. Relative to where it is now, that's a crash, but it's not like a Brazilian or Guatemalan style crash where you actually sort of reverse, or Argentinian.
Let me turn it over to the other superpower, the United States. I was reading an article, I think from last year, which basically touched on the situation of the United States as an economy that obviously institutions in the U.S. are strong, et cetera, and it is a superpower. But in recent years, in the last couple of decades especially, the United States has become much more unequal. And also the influence of money into politics has become much more important. So kind of the question would be, is the United States going through the path of turning into an economy that had inclusive institutions into more exclusive institutions?
Yeah, so the danger path here is Venice, we discussed in the book. Venice started from unusually inclusive economic and political institutions in the 10th century relative to its time, much more broad distribution of political power, very innovative in contracts and shipbuilding, and grew very rapidly for 3 years, becoming probably the richest country in the world. And then those who became economically very rich started dominating the constituents, the sort of the parliament, the ducal council, and they started sort of protecting their businesses, and then sort of started declining. So the question is, will the U.S. follow a similar path, because we have inequality, we have money in politics, exactly those sort of things. The way I would put it is that U.S. has very, very serious challenges on in front of its inclusive institutions, but I wouldn't say that we are at the Venice point yet. So great inequality in the United States. We have the same level of inequality, more or less, of what we had in the Gilded Age, when the robber barons were roaming wild, and money in politics, or connections between businesses and politicians. Again, that was very, very bad at the beginning of the 20th century. At the end of the 19th century, we're probably not there yet, but we're doing very badly in those domains. Great inequality can lead to a lot of bad policies, either because the very wealthy are able to get their way, and in the U.S., for example, in the issues of how capital should be taxed and should it be profits that are made abroad, that money matters a lot. Finance, financial risk taking, too big to fail. Politics matters a lot. On the other hand, great inequality can also trigger very populist policies. You can settle into a sort of a bad equilibrium in that also. So I think all of those are dangers, but I think U.S. institutions have also shown great resilience in the past. I've mentioned, the robber barons and the Gilded Age, but, even though things were worse at the time than they are now, U.S. institutions really reformed themselves. They started regulating monopoly. They changed the election of Senate because senators were very much in the pockets of the very big businesses, so they made Senate directly elected rather than indirectly elected. They introduced income tax. They introduced the beginnings of the regulatory state. So all of those were political changes starting from a worse situation. Same thing, for instance, the way that U.S. institutions for a while weren't very successful in dealing with Jim Crow and segregation in the South, but ultimately were able to deal with. So I think U.S. institutions are slow sometimes in dealing with these challenges, but they have in the past dealt with them. Now, am I optimistic that they will be able to do it without any changes in the current environment? I think there are some questions. I think fiscal deficit is a very difficult problem to deal with because you always have an incentive to kick the can down the road. But I think dealing with the root causes of inequality, some of it is very difficult to deal with. But some of things, introducing better education, removing the barriers to work incentives. U.S. Sort of encourages people to go on disability insurance rather than unemployment insurance. Education systems deficiencies, tax systems deficiencies. I think some of those are actually better. I think there will be. My sense is that there will be ways of dealing with some of these problems, but then there are some very key distributional conflicts about how to deal with fiscal deficit, etc. Those are hard problems.
But besides from resiliency, from what you're saying, I'm kind of getting concerned because I'm not so sure that there are any incentives to avoid the path of going downhill. I mean, from what you're saying, it seems that inequality is there, and obviously, if you're a politician and you have the political will to try to reduce inequality, then yes, but that doesn't seem to be the case.
No, I think you're 100% right. If you just if the hope was that politicians one day will wake up and say, well, today I'm going to do the right thing, despite the fact that this is not what's in my interest or will not keep me in power, I would be totally with you. I would be very pessimistic too. But how did the U.S. do it in dealing with the Gilded Age or in dealing with Jim Crow? Well, people outside the political parties started movements. In the Gilded Age, there was the populist movement and then the progressive movement that sort of came outside the parties and really influenced both parties. In the U.S. South, there was an equilibrium with the Democratic Party of the South, having a national power that sort of protected the Southern segregationist things, and then with first civil rights movement from the grassroots, and then also the realignment within the Democratic Party, that sort of equilibrium collapsed, and that sort of started changing the total character of Southern politics. So therefore, the hope is that it's not necessarily that Republicans or the Democrats themselves are going to do it by themselves, but with the media, with people becoming more and more disgruntled about the system, there's going to be more pressure on them to do something.
So something like the Wall Street movement?
Well, Occupy Wall Street, I think, was emblematic. I don't think it was the right movement in the sense that it was a little too fringe and, had from the beginning said we don't want to get engaged with any of the parties. We don't really have any policy objectives. But I think it was it's a symptom, as was in some way the Tea Party, of a large segment of the population being unhappy with the current political equilibrium, and the hope is that that's going to be felt in some way that translates into more meaningful change.
Okay. And just to bring it to a more familiar context to us, in Latin America, well, obviously we know that institutions in Latin America have not been that great. So, probably you would argue that Latin America has gone mainly through the extractive type of institutions. But again, there's been, especially in the past 10 years or so, there's been important changes that, I guess you could argue that some of them have gone through the way of inclusive institutions.
Absolutely, yeah,
right?
I think that's absolutely right. Yes.
What do you think in general for Latin America? What are the steps that are missing to give the big jump towards the way through inclusive institutions? What's missing?
I think I totally agree with the premise that over the last 20 years, there have been important steps, and the issue of institutions building is not an easy one. It does take time. I think the biggest challenge that I see for many countries in Latin America is that some problems are very well identified, and then they create backlashes, and then the backlashes could overshoot. So I think one problem in Latin America, which I think many people understand, is that traditional elites, both within politics and within the economy, have been for too long far too powerful, and that's kept Latin America back. I think that's most visible in places like Bolivia, Ecuador, Venezuela, but it's also true in Mexico, it's also true in Brazil, it's probably also true in Chile. So, but how do you deal with that? Especially if for decades the same people are in power, directly or indirectly, and the political system doesn't seem to have dealt with them in the past, then the tendency of people is to say, okay, then we're going to support people totally outside the political system, like Evo Morales or what Chavez, and we're going to let them override the political checks and balances. And then that creates another problem. You sort of weaken the traditional elites, perhaps, but then you create a lot more inefficiencies because you're essentially making an authoritarian guy sort of all-powerful, and then he's going to follow populist policies because he's defined himself as against all business interests and so on. In Brazil, you don't have that in the same extreme form, but you have that, the Workers' Party is a Workers' Party, so it has always had somewhat of a difficult relations with business. So I think it's sort of how do you create that synthesis so that, these movements are really liberate the traditionally disenfranchised, disempowered parts of the population without at the same time going into a sort of a populist direction. That's one of the challenges. Other countries have other challenges. I think for Mexico and Colombia, for example, I think how do you increase the power of the central state while at the same time ensuring that politicians remain constrained and politics remains pluralistic and distribution of power remains equal. Colombia, Mexico, together with Honduras, El Salvador, Guatemala, Venezuela, have very, very high crime rates, very high lawlessness rates, and it's a reflection of a deeper problem of the absence of the states in large parts of the country, which then leads to lack of public goods, lack of roads, lack of resources, this sort of undermining of this level playing field. So for that, you really need to have a reorganization of the state, strengthening of the meritocratic bureaucracy, and so on and so forth. But at the same time, you have to make sure that that happens within the context of inclusive politics.
I may finish with my favorite question. Due to this financial crisis, a lot of theories or paradigms or thoughts or views that many people had, many economists had before the crisis, kind of have changed a little bit. Most notably, Alan Greenspan at some point was very remarkable on a statement in front of TV also, saying, I thought I was right, but maybe I wasn't. So what would you say is the thing that changed your view about the way you see economics, economic theory, financial economics, etc., due to what happened in the Great Recession?
I mean, I think I was never in the same camp as Alan Greenspan, but I would agree with the same conclusion, which is that, I was surprised by how fragile the financial system was. I had thought that the lack of regulation was somewhat problematic, but I would have never imagined that there would be so much hidden risk in the economy. I mean, I'm not an expert on finance, so I hadn't studied the balance sheets of banks and the shadow banking system and so on and so forth. But I think it sort of is an important. The financial crisis is a wake-up call also for the economics profession in emphasizing that we have to think of very systematically about the risk-taking incentives of especially politically connected players. But also we have to be much more modest in thinking that market mechanisms are good ways of sort of creating reputations and preventing sort of bad behavior. That you need a more sort of a variety of tools to deal with bad behavior, moral hazard, or risk taking, and so on. So I think it is a humbling experience. On the other hand, I also don't agree that sometimes people exaggerate. They say, we have the financial crisis, we have to rethink all of economics. It's really irrelevant for a relatively small part of economics. So that's an important part for business cycle. It's certainly important for the plumbing of the financial system. But I think also when you step back, you see that it's very much consistent with the role of incentives, political economy, organizational economics issues that people were thinking, have been thinking for the last 15, 20 years. It's just that they hadn't put this framework in exactly the way that would have led you to a sharp analysis of the inefficiencies in the system before the financial crisis. But I think it's also not the case that we need to throw out a large part of economics. We just need to keep on refining it all the time.
Thank you very much.
Thank you very much, Andres.